I had a 17-year career in financial markets. I help successful people protect what they've built using Bitcoin.
It's just literally an indicator of how the world is right now. We're in such a bad place, there's so much uncertainty.
You've got this current system of money, which is being printed into oblivion. If you have 100 grand in the bank today, in 10 years' time, it'll have halved. That is the money system we're coming out of.
Property versus Bitcoin.
I don't like to think of it as a versus. I think it should be an and. Bitcoin is the purest form of property rights.
The technology should be the conviction behind most people, not the price. In the future, one Bitcoin is going to be worth a skyscraper, and you're buying them at a stupid discount now. Welcome back. Episode 94 of the Ground Up podcast. It's going to be a meaty one today because we're going into the world of Bitcoin. Just if you're a new viewer and you don't know who we are, we're four property developers that host a podcast every week. We talk about the markets, we talk about property, we talk about new legislation, we talk about anything that we hope is disseminating information that may be useful to you in the landscape of property and business. But we're also big Bitcoin advocates. So that is going to be the main focus today. You got Stuart Wyeth, myself, Ryan Beaumont. Usually we have Dorian and Jack, but they're not going to be here today because they don't like Bitcoin as much as we do.
And Jack Skiing.
And Jack Skiing. We've got a special guest that Stu's going to intro in a minute, but please first subscribe to the episode. Helps us out a lot. And stay tuned because Bitcoin has fallen through its arse and we're going to be going into reasons why. But Stu, do you want to intro our special guest for this episode?
Yeah, hello everyone. Thanks for tuning in. Today, as you can see, we are doing a Bitcoin special. And it was ironic that yesterday was the third worst time in Bitcoin's history, effectively, where it's fallen through its arse. And then the day after, we've got another Bitcoin believer on the channel, our first Bitcoin believer we've had on. So, Nick, welcome to Ground Up.
Thank you. Morning, gentlemen. Thank you for having me on. And like I said, kudos to you guys for getting up this early and trying to talk some sense.
We try, mate. We try. Would you want to give Nick? You've got a background in banking and the financial world. Do you want to just give us a 30-second elevator pitch on your credibility to speak in this space, basically?
Well, I had a 17-year career in financial markets. I left a global investment bank at the end of 2024. I was on the equity sales desk. So the job there is to connect companies and fund managers and just know about what's going on in the market. I first discovered actually Bitcoin in 2014. So over sort of 10 years now of studying it, playing with it, using it, investing in it. And now I essentially run a business. I've got a few other interesting Bitcoin related businesses in the pipeline. So maybe some interesting things to talk about there. But right now I'm essentially running a education and consultancy and advisory business where I help successful people protect what they've built using Bitcoin. And the idea is to bridge the traditional world with this kind of very chaotic, as we can see recently, definitely, this very chaotic, confusing world, and kind of speak the language of a traditional person who knows equities, knows property, knows the real world around them, sees this interesting thing over here, but isn't quite sure how to navigate it. So I'm essentially the guide in that new world using all my traditional world experience.
Beautiful, mate. Beautiful. Let's get straight into the meat of it, because when I went to bed last night, I took a screenshot of the Bitcoin price. So for the viewers who are just listening, I brought it up on screen, and that right there is is anyone's worst nightmare, but not for Bitcoiners who don't really give a shit about the price. It's about how much Bitcoin you got, not about the worth of the Bitcoin that you've got. But that there is ultimately a 50% drawdown from its all-time high, I believe it is. So £46,000. I think it went to $60,000 or $62,000. And why, guys? Why has it gone down? What's your best bet, Stu, as to why Bitcoin has tanked out its arse?
Mate, it's just literally an indicator of how the world is right now. I mean, we're in such a bad place. There's so much uncertainty. I mean, gold and all these metals. I mean, all these institutions that were sort of selling the fact that they understood and sort of got Bitcoin, and the fact they just sold off into these metals. I mean, silver's falling now. It just shows you that the world is such an uncertain place that people would much rather have dollars in their bank or fiat currency and pull out for cash. They think that Bitcoin's a stock, and it really isn't a stock or something to trade. And if people would rather cash in their bank that's being debased and it's falling through its ass as well. I mean, there's just so much uncertainty. It's called FUD, fear, uncertainty, and doubt. And the markets really are playing that to their tune. All institutions are literally manipulating the markets down as much as they can to buy as much as they can at $65,000 before the Clarity Act comes out in a few weeks' time, and then boom, I'm still a believer that we will be up at $200,000 by June, July this year. I mean, that's sort of like a left translated cycle, which I think is what's going on. But who knows? No one knows. All I know is that one Bitcoin equals one Bitcoin, and I'm just scuffling around to get as many hundreds or thousands of pounds I can to buy as much as I can at these prices. Because if you understand Bitcoin, the more cycles you go through, the more confidence you get in the market. And people who have been buying in the last 6 months, 9 months, will really be feeling the pain now, and they'll be like, "What the hell have I done? I've been sucked into this Ponzi scheme, this bubble that I knew I shouldn't have got into." And unfortunately, those people, some leave and go, "No, I'm not involved with this," take their losses and leave. And some people sort of dollar cost average into the game a little bit longer, and understand it and use this time to buy themselves into 2, 3, 4 cycles time, which they hurt a lot less.
We look at it as a discount, don't we? Is that a discount?
Always, always. It's half price at the moment.
So, Nick, what's your thoughts, mate? Why has it dropped out of its arse?
You know what, gents? I'm possibly the worst guest to have on at times like these because so I run a community as well of Bitcoiners and people that are interested in crypto. And as part of that, I write this monthly report about what's going on with prices and markets and that kind of stuff. And it's really the main time that forces me to actually look at prices, because generally I just don't look. I'm an incredibly long-term investor. The clients that I work with, I just get them to focus on why they're doing it, what their long-term goal is, and ignore the hype. And so, like, a friend of mine actually messaged me the other day, and he said, "Oh my gosh, I've just looked at the Bitcoin price, and I think he put $65,000." And I was like, "Oh, bless him. He's used a dollar sign instead of a pound sign." And I looked at the actual price. I'm like, "Wow. Oh my gosh, it is $65,000." But I think it's a chart like that. I don't even look at charts like that. I use log charts. I use long-term charts. And I know people say zooming out is a cop out because it makes everything look rosy. But it is rosy if we go back to the fundamentals of what Bitcoin is, what it's going to offer to society and to investors and to savers, and to the financial system. It's an incredible thing that we can't escape. The fundamentally incredible thing that Bitcoin is. In terms of near-term prices, I mean, if I put my markets head back on, the government shutdown probably isn't helping in the US. That's another one. It extracts liquidity from the system. There's been crazy moves in the bond markets. I mean, the Japanese bond market on the long end is just doing like things that you would just never imagine seeing in terms of price and yield moves. I think somebody said the other day there was a move in the Japanese government bond market that is a 1 in 100 million probability event. And so this stuff that happens across the world filters through markets, and Bitcoin and crypto doesn't exist in a vacuum, so it's going to get hit by this kind of stuff. And Stu, I think you talked about the trading aspects of stuff. There are going to be hedge funds or trading desks out there that are trading Bitcoin, and there might be a Bitcoiner on the desk who's like us and they believe in this thing and they see it as a buying opportunity. But their risk guy or girl will call them up and say, "I don't care what you think about this thing. You've got to dump X% of the position now. Do it now." "No, no, no. This trade's going to work out. But trust me, bro. I've done all the research. I know this." Get rid of it. Sell it. That's the kind of inner workings of the financial system that will cause stuff like this. And I think at times like this, I encourage people, especially newer and recent buyers, who, like you said, might have bought in at the top. They're thinking, "Oh my gosh, what an idiot. I'm so stupid." I like to get them to imagine the most powerful financial people in the world, the Black Rocks, these billionaires, the sailors, all these kind of people that are have got huge resources to research financial assets and markets and connections, and they think long term. And I imagine them all sat around a table, and I imagine them laughing their heads off, laughing at people that get spooked by a red candle, think in months, not years, maybe even decades, and just get freaked out by all the stuff on social media. And these guys are sat around the table laughing, going, "These guys are out of the trade already. Cheaper stuff
Yeah,
for
I'll
us."
take it.
Yeah. And
Absolutely.
then my basic 2 cents just comes down to the world's in a strange place. For the layman to understand, world's in a very strange place. All capital markets are strange. Gold is strange at the moment. Silver, copper, based on the back of it's something to think about. That was it. I think it was J.P. Morgan who came out from shorting silver for such a long time, flipped it, basically came out and they basically debunked the market and they become the biggest silver holder in the world. So there's definitely these macro moves from huge banks, huge institutions who are playing on the metal market, and that will also be distracting capital and other kinds of things. And then you've got wars, you've got political uncertainty, heavy indebtedness of Western economies. There's so many things that play into it, but the utility function of Bitcoin is my conviction is the most immutable ledger. It's basically one of the only asset classes that is baked into the electrons and usage of electrons in the world through the mining system. The technology should be the conviction behind most people, not the price. And I think once we understand that, that's the main thing that keeps a Bitcoiner in the market at a time like this. And we just look at it as a buying opportunity, even though most people go, "Fucking hell, mate, like, what do you think about this Bitcoin thing?" And I go, "Well, I bought in at 14 grand. So to me, it's well up. Like I'm well happy with the position." But what do we think? When do we think it's going to bounce back?
To be honest, the longer it stays at these prices, the better if you're a long-term fundamentalist and believe what it actually can do for humanity. I'm not too bothered as long as it doesn't drop like 2010 and just scare so many people out, because I just feel like we're going so far backwards with, I want to see it take over and become the number one use of money around the world, in my lifetime. And I just don't want to wait any longer. I think it's going to do so much good for the planet. Just on the price, Bitcoin is a protocol. It's like the internet. There is no board of members. There's no government. There's no country that's managing this thing. The price is the only marketing tool it has. So all of this market and this not understanding what it is, the people who understand and spend the hours learning about Bitcoin, which the three of us clearly have, will benefit the most, because we're buying it at 14, 16, 18. We're the ones that are now watching these podcasts, buying it at $65,000. And when it is reaching 250, it's not even about what it's valued at in fiat, because I don't care what it's valued at fiat. The value of the Bitcoin, of 21 million pieces called Bitcoin that can be broken into 100 million Satoshis, which is obviously segments of a Bitcoin. It's how many of those will run the world eventually. And when people only work for Satoshis, you create a bit of a deflationary market. And that's where people are going to want to work for Satoshis and not work for currencies that you can swap out and have. Oh, sorry, my phone's going. And have the price going month in, month out in hyperinflation terms. So yeah, I don't really care about the price too much in dollars or pounds. All I know is that the cheaper it is, the more I can buy. And I want to get to levels that I never thought were possible. And at 150,000, it's very difficult to see yourself buying many more Bitcoins in your career unless you're uber wealthy. But at 65, I've got twice the chance to buy more. So yeah, happy days. Just as long as it doesn't get too erratical. But I think the price is the marketing tool, the number one marketing tool of Bitcoin. It gets everyone talking like.
And Nick, what do you think? What do you think the bounce back will be? If you could try and speculate, I know it's not fun to do, but for viewers' sake who may not be into the Bitcoin market, I think they'll find it interesting to speculate on what the price may be come the end of 26 or into 27. What do you think could happen?
Yeah, I really, really avoid near-term price projections, certainly months, even the next 12 months. Because I know, I was in a career, I was paid to try and understand markets and make predictions and forecast the future, and then call people up, putting millions of pounds of money at work to kind of tell them what I think. Whereas now I kind of try and step back from it. The most successful traders I've ever kind of worked with, they were right half the time, but it was just how they managed the downside risk and let winning trades run to the upside. So making predictions is really hard. I just again come back to the other thing is, if you're looking at charts, a nice little trick I'd like to do is go back to a point on the chart where we've seen a huge drop like this, and and then kind of zoom in so you don't see the future, and then either, if you were there, try and think what it was like when it was like this last time, and if you weren't there, just imagine what it would be like owning this asset, whether it's Bitcoin, Nasdaq, stocks, property. I know you don't have charts, but what it would be like at that time, with these huge red candles, how scary it is, how fear-inducing it is. Oh my God, the world's coming to end. What's it going to do next? And then you kind of zoom out and you go, oh yeah, over time it's going like that. And that's all I think about. I know in 5-10 years time, nobody will remember this. Nobody. I mean, if you're here like you are now, we'll have this kind of like brotherly loving or a team loving, sisterly loving, and we'll go, do you remember back then when everyone thought we were nutters and the price was falling like double-digit percentages on a week-by-week basis, and we were all freaking out? How funny. And now, like, nobody talks about it. So I hate to make predictions. If you were to really push me, oh man,
Stick a number on it, Nick. Stick a number on it.
I hate
December 26th.
I really hate doing it. I think the opposite way to think about it is like, if you come back to the fundamental reason of the trade for a lot of people, and it's one of the reasons that gold's been doing what it's been doing. You've got this current system of money, which is being printed into oblivion. If you have 100 grand in the bank today, in 10 years' time, it'll have halved. Let's say we live another 40 years or so. If you leave that 100 grand in the bank for 40 years, the purchasing power in 40 years, given what's been going on with money printing, is probably like less than 7K. So that's the problem. That is the money system we're coming out of. We're going into this other potential money system called Bitcoin, where that just can't happen because you can't print it into oblivion. It's scarce, 21 million. That is the fundamental trade. So therefore, when you come up with potential price predictions, I say, well, what are they going to do with this money over here? Well, they're going to continue printing it. They have to continue printing it because of the debt problems we've got. So if the current rate of printing is going to cause that money to halve in 10 years' time, then what's that going to do to the Bitcoin price? Obviously, it's going much, much higher.
I did a couple research and bits last night just to look at what some of the big sort of Bitcoin hodlers and banks thought of price projections for 26, 27. And pretty much all of them suggest anywhere from $150 to a $300,000 price during 27. So that's just for viewers' benefits. And if we think about it at $62,000 now, that's some of the best people in the game with the best analysts they can. Sure, they are the people who are Bitcoin maxis. They're assuming those sort of prices. On the flip side of that, there's people like Michael Berry, is it Michael Berry, who predicted the 2008 crash, who thinks that if the price suppression's too heavy right now, it could be a very long time for price recovery in Bitcoin, particularly with just what's going on in the world. And there's others who think a similar thing, that it could even go down to as low as $10,000. I don't see it going that low. I just don't think the market could be squeezed to that kind of cap in such a time when there are so many big institutional capital allocators who are looking at Bitcoin as a store of wealth. But yeah, price. Anyone in Bitcoin who's been in Bitcoin a long enough time knows that the price just doesn't matter. It's about how much Bitcoin you have, because in the future, one Bitcoin is going to be worth a skyscraper, and you're buying them at a stupid discount now. Can I get your perspective on Cathie Wood and what you think of her and her research with her team? Because they're predicting $1 million Bitcoin by the 2030s, just based on the capital movements in the market and what's happening to the sort of erosion of the fiat system. Do you tend to agree with like a sort of 10-year horizon where we could see, $1 million, £1 million Bitcoin, which is obviously an exponential difference in where we are today? And I'm sure at that point that people are just going to go, well, it's $1 million. Like, I think there's a psychological difference between £1 million Bitcoin.
People will stop pricing it against the fiat. It will just become Bitcoin over that period of time. Like,
But new people
everyone
won't.
thinks the price is a bubble. Just one, the last point I wanted to say about the bubble, but Bitcoin isn't a bubble. If Nick was in it from 2014, he'd remembered the price is going up to 1,000. I've just done through research, but up to 1,000, and it crashed to $250, and then up to 20,000, down to 3,000. Like, it's always done the same movement because it's just the humanity trying to market this thing, which is so unique and so different. But I mean, yeah, Cathie Wood, I love what she's doing and what she represents, and Jeff Booth as well is another one who I listen to even more, because that his foresight on the world, the way it's going with deflation in a world where things should become cheaper over time, the marginal cost of productivity is what should be happening, but because of the capital markets, we're constantly pumping more money into the system. There's more money to buy goods and services. So if you stop pricing it in fiat and start pricing it in Bitcoin that is scarce, people will do goods and services for less Bitcoin because it's more valuable than everyone goes to the hardest asset, which is a Bitcoin. And once you understand that, you want to save everything you've got in it. And it's not easy when your whole everything you've got is halved overnight. Literally over since October, I know I'm now half as wealthy as I was, but it depends on what you measure it in. I'm still equal to what I was in Bitcoin. So that's what Cathie Wood sort of stands for.
So Cathie Wood is the founder of ARK Invest. Just for the viewers' benefit, Cathie Wood, founder of ARK Invest, they do a hell of a lot of deep research on the technology markets, on Tesla, on robotics, on AI, and on Bitcoin. And they're very bullish on Bitcoin, Tesla, and the likes. And they're predicting $1 million plus Bitcoin as we go into the 2030s.
Yeah, I think Kathy's an incredibly smart woman. She gets a lot of flack on social media, but you gotta imagine this lady and her team and people in that space. They are surrounded by very smart people doing incredibly deep research, and so I like to say to people, just try and find the smart people out there, the people that think about things critically. Obviously, there'll be people on both sides of the argument for the positives and negatives, and just kind of see what they're saying. And when they talk about these price targets, if you can. I know a lot of this stuff is, paid. They offer the research to their clients, and their clients are paying good money for it. But if you can, try and find out like why they're coming up with these price targets. How are they actually trying to value Bitcoin? I mean, the scary thing, I don't doubt Bitcoin will reach $1 million+ at some point. The scarier thing is, given the underlying thesis of what Bitcoin is, what is actually happening in the world, and with standard money, the dollar, pound, euro, yen, what is happening in the world that causes Bitcoin to do that? I don't think Bitcoin's just gonna, FOMO up to 1 million. I mean, we've seen that in the past where market momentum gets away with itself and you get these crazy prices, and that might be one driver for the Bitcoin price over the coming, few years. But ultimately, the basis of the trade is get out of some crap and go into something that's solid like Bitcoin. And if it's at 1 million, what is the crap doing? It could be a scary time. But the likes of Cathie and ARK Invest, they're incredibly smart people, and I think it's worth taking notice of what they're saying.
What do you think a world makeup would look like where Bitcoin is the dominant asset class? It's the global currency. Well, it's not necessarily currency, but it's the global asset that everyone is basing back to when they're taking their salary, which may be in Tether, maybe in USDC. There may be some liquidity currency that sits kind of above Bitcoin. What do you think it looks like? Do you think it looks like the big crypto holders? Does it look like the micro strategies kind of pivot to become the banks? Do you think the banks can keep their positions in our global economy, in our markets, as like, the aggregators of people's wealth and the distribution of people's wealth? What do we think that kind of world sort of looks like as we transition to a Bitcoin economy?
I think when you come to Bitcoin, you go down the rabbit hole, and there's this whole libertarian view, and that it can completely upend the current financial system. Which by the way is what I've got a YouTube video coming out today talking about this. It's actually one of the things that holds Bitcoin back. I think if you're speaking to a serious equity investor, a serious property investor, a serious person of any nature, and you're going, hey, this financial system we're in is pretty screwed. We can see that anywhere we look. This Bitcoin thing could replace the current financial system. Like, that is a very weird mental conversation to even approach to the normal person. They're like, "You're mad, mate. What are you talking about?" So I think the movement from where we are now to Bitcoin becoming more widely adopted and more embedded in the financial system is going to be a bumpy one. And I don't actually think, I'm probably not one of those Bitcoiners that thinks we can get to a true Bitcoin standard, because it just, I don't know if you're familiar with The Fourth Turning, but it's this book about how huge change happens across society every 100 years or so. And we're potentially going through this fourth turning now. And so things can get really messy in politics, society, economics, and business, money markets, financial markets, etc. Things can get really volatile and uncertain and scary. Maybe we're going through that right now, and maybe Bitcoin comes out the other end and sort of has a bigger place in that new world. But there are lots of vested interests in traditional markets, in property and equities and stocks. global bond markets. There's lots of money tied up in that. It's not just all of a sudden just going to pause across to Bitcoin. That's a very messy situation to be in. So hopefully, I want it to be a bit slower and steady and gradual. And then we get into this whole argument about the likes of Saylor and BlackRock and these guys owning all this Bitcoin. Does that kind of distract from what Bitcoin is, like this decentralized peer-to-peer money system, which you don't get if you own it through BlackRock or you're owning MSTR and Saylor owns, whatever percentage of Bitcoin he owns now?
The more aggressive it goes up, that the world and the people who don't understand Bitcoin are going to get hurt the most. And the more calm and slow this is, but the fourth turning, Ryan and I are both aware of that, and normally ends in war, and it normally ends in very volatile, uncertain times. And I think that Bitcoin has been designed for it's our lifeboat, as Saylor says, and that is, we're trying to now, by doing this, we're trying to get as many people in that lifeboat as possible, because I think when the money markets fail and everyone loses faith on something that's being printed into oblivion, when you go to the supermarket and like Venezuela, you have to look around what's going on now. India, Turkey, Venezuela, all these currencies are losing control. The Iran, everything's nuclear to Bitcoin. The amount of fiat you can buy in their local currencies. When it fails, it's going to fail hard. And I think if the dollar, every 100 years, a new currency is formed as well. And the fourth turning is about an 80-year cycle between, it's enough for humans to sort of live and die, so that everything gets forgotten about. But the lessons are learned by the elite, and this whole cycle of war, liberated, sex, drugs, rock and roll. Then everyone craves a bit of law and order. Then you get suppression, and everyone in the third turning is all about trying to control people to to every single decision they make in life. And then you have this explosion where everyone just needs a new reset, and things get muffed up. So Bitcoin's designed for it. So let's see what happens. But the more people who understand Bitcoin, the better.
This is where I'm going to play slight devil's advocate to Bitcoin as an economic utility, because the fourth turning, talking about what is like a monetary standard, and yes, that's monetary standards have changed throughout society, throughout history, but never in light of something as reconstituting as AI. And I'm a much bigger believer in AI than I am in Bitcoin. And I think most people are, at their heart, they believe AI is going to be drastically more disruptive than Bitcoin will be, even though Bitcoin is in itself very disruptive. But let's say we live in a world, let's play a bit of a thought experiment, where AI and robotics combined is the ultimate deflationary force function in an economy, to such a point where it could reduce goods and services to near zero, where you've essentially got an abundance of energy, an abundance of labor. And what is money if it's not just the extrapolation of human time and labor baked into supply chains, baked into the price of goods? If we live in a world like that, what's the point in an asset class that holds economic value and scarcity? What does it mean from an economic point? I still think Bitcoin has a place in terms of holding and valuing scarcity in a abundant technological and digital world. I still think there's a utility for that aspect, but the actual economic driver behind Bitcoin, what does it matter if people are living on UBI, they're living on income that's either passed out through the government, or goods and services that are passed out through the government, or just because goods and services are so cheap that you don't really need to care about the storage of wealth, because AI and robotics will just make things, food will be free, energy will be free, transport will be near free compared to where we are today. What do we think about that in conjunction with each other? The idea that AI reconstitutes everything anyway, so does money even really matter in 10, 15 years?
Even in that system, you still need a form of money that makes everything work. We're not going back to barter. I mean, I agree. I think AI brings the cost of things close to zero, and maybe UBI comes in, or the government steps in, or we redistribute wealth somehow from the tech guys and the AI guys into people that can't find work anymore. But the money is still the kind of the fuel in that system, and it comes back to whether it's the government doling out the money, or somebody earning money by owning an AI agent, or the AI agents.
Okay, we lost him. I'll go while we get him back. So
Go on.
on your answer, on your question, you said that we still, the government are handing out something. So whether it's central bank digital currency that no one's going to believe in, they're going to take their currency, flip it straight into something that can't be stopped by Bitcoin. So money to me is like a global scoreboard, right? It puts the elites where they are, and it puts the working class where they are, and it puts governments and countries. Everyone will always barter for one thing or another. And sorry, Nick, you're back, but I just wanted to take over where you dropped off there. I was just saying that money's like a global scoreboard, right? So it just keeps governments in check and order and balance. It keeps the elite, and every time they print more money, the M2 money supply, as long as the elites get more of the percentage of the pie as they print more, they always remain at the top of the scoreboard, and the people are relegated and drop off for third world countries and the working class, unfortunately. So you'll always need money, and I think AI is going to need a fuel or a currency in order to work. And basically Bitcoin is a store of energy. It's not a store of fiat currency that we've all been grown up to know. It's stored energy that I've worked for time and goods today. I've stored my hard work in energy, and I wish to deploy that energy in the future. And I think that's what the whole economy you just spoke about. But yeah, no one's going to believe in what governments can print. And the pyramid cycle is Bitcoin sits to the top, and a country will leverage as much money they want and to base their own currency based on the amount of Bitcoin they hold. And this is where Sailor and stuff could come in the future, and actually for their store of wealth companies, basically. So yeah, we'll always need money. But go on, Nick. Sorry, you dropped off, mate.
Yeah, I don't know where I got cut out, but I mean, it's again like if you think AI gets to AGI, ASI, wherever we get to, yeah, let's say they talk the same language as humans, they will still say, "Hold on, I'm doing all this work, and the government is printing this money at an incredible rate. So all this work that I'm doing for free, all this compute that I'm using, you're just printing money for free." The money itself that is being distributed through the economy and by whatever means that happens will still have to be a solid form of money, scarce, transferable, all the things that Bitcoin offers. That is, if you say to AI like what kind of money do you want to use, it's not going to say fiat.
To me, what will be people's purpose in that kind of future? Because I don't necessarily agree that we need money in that sort of future, because people may opt to some just kind of quasi agrarian lifestyle where they just don't need to. They don't need to work or contribute to the labor markets or anything like that. And if things are genuinely near free, I can see those kind of AI and robotics companies becoming a public utility, because the three aspects that money doesn't really affect in that way are, I've noted them down, is voting, property rights, and intelligence. Those three things are kind of like they're detached from what money really is, because they're basically sovereign utilities. And I think but I do think Bitcoin has a big play there. And I think for people who don't necessarily understand how Bitcoin works at a technological level, and how these mining, how the mining works, essentially, and the nodes on the network and the proof of work system. Essentially, it's regulating electrons. It's regulating the use and putting a price on electrons, which is why it's such a good force function for cheaper and cheaper energy. Bitcoin kind of plays into the hands of AI nicely, and I don't think it's a coincidence that we have two phenomenon technologies: AI that creates absolute abundance in the digital world and combined with robotics in the physical world, and a technology that creates immutability and scarcity in that very same world. I think these two things will have an inherent synergy, whether that is economic or whether that is this is the way our new voting system will be reconstituted, because it's something we can trust and that is scarce and that is visible for the world to trust, and is something where we put a price on intelligence, the use of intelligence, the use of energy, and we may move from a GDP economy where or GDP per capita, where we're valued in our monetary output, to something that is basically based on our electron output. It becomes a different kind of metric to value society and the exchange of goods and services. And I do think it's something worth thinking about, because whenever we think about Bitcoin in the long term now, you have to put AI in the conversation and go, well, then what happens there? What fork in the road do these two things kind of conjoin, if we think they do conjoin? But what do you think about that? Two phenomenons opposing things that should complement each other in the fourth turning the world that we're heading towards.
I mean, so Bitcoin is the purest form of property rights. I
Yeah.
think obviously property's real, and everyone loves property because you can go and touch it and build it and it's cool. But if you own a property and you stop paying your council tax, let's see how far the property rights go then. Like, you can
Yeah.
lose your house.
Mm.
But in terms of yeah, everything goes to zero. Agrarian societies, you're just like having fun in the field, going walking, whatever. You don't need money. I get that, but some at some point in the chain, somebody is creating value, whether it's AI or a government or whatever, and that value has to be measured and transferred from either person to person or transferred into the future.
And we think Bitcoin is built for that future, basically. It's the only asset class at the moment that is built to regulate that kind of future, right?
Yeah.
Money can't do it. Gold can't do it.
There's $900 trillion worth of assets. The global money funds about half that, and then assets, property, is the other half. And that money and energy, that but worth, human worth, has got to go into something. AI isn't going to just delete that and go, "Oh, none of that's worth. It's all worthless." There'll always be a voting system, like you said, and I think Bitcoin is that voting system. I think Bitcoin. I think it's a stat I remember from years ago. I think there's obviously 9 billion people on the planet, and Bitcoin's been designed where the average person would own about 300,000 satoshis, which is 100 million. One Bitcoin's 100 million satoshis. Each Bitcoin would be broken down into 300,000 parts, which is enough for everyone in the world to own 300,000 satoshis. Right now, to buy that is about 150 quid. In terms of your average amount of Bitcoin of the network will cost each viewer 150 quid to understand how to buy it. And obviously, that is basically where I see it diluting to on average across the world over the next 100 years. And if it will come that way because it won't be 150 quid measured in fiat. That 300,000 satoshis will be enough to live a life, a happy life in 100 years' time, using the leverage of AI and the fact that labor won't be charged the same way. But what Bitcoin allows you to do is to take your worth and move anywhere in the world that treats you better. So if Iceland starts becoming the best place for everyone to move to, or Dubai, or wherever, Antarctica, you can up sticks, take your family and your wealth, your energy, and move it somewhere else. And that's where I think we're going to have this huge migration, this huge shift that's going to happen again over the next.
Just to pick you up on the 50 to 100 year aspect, I personally believe that the hockey stick or the exponential rate of AI that's fucking flying and is going to completely change the whole way the world works in a very short. I mean, it already is, and it's going to massively transform it with robotics. I think that is quite closely tethered to Bitcoin through an optimistic lens that people understand that in this kind of world, like, what does it mean owning a derivative or owning an equity or whatever? Like, what does it really matter? I need something to store value, to store my economic worth, my potential for leverage. Not as in leverage in a financial sense, but as in how can I own a desirable property that I want on a beachfront, or go on this holiday trip, or a fine piece of art, or some clothing, whatever it is that may still hold value beyond the monetary system. And I think that's where the flight to Bitcoin is going to be accelerated. AI, I think, will force people to find another utility for a store of wealth. And I think we'll fly into Bitcoin much quicker than 50 to 100 years. I think that's where Kathy Wood's kind of coming from as well, with her sort of 10, 15-year horizon. And what do you think of that, Nick? Do you think that as AI massively increases, there'll be even more of a pressure on capital allocators and just people in general to find something where they can store wealth, and they should all reduce down to, well, Bitcoin's the only sensible thing, right? What do you think of that?
Yeah, I mean, AI is injecting a huge amount of uncertainty into the world. So, it's both an exciting and an incredibly scary time to be alive, I suppose. But ultimately, yeah, it just comes down to something that's going to hold its value over time. And that usually comes down to being scarce and how useful it is and what kind of economic benefit it provides to society. And Bitcoin ticks a lot of those boxes. I know you guys are property guys, and obviously property ticks a huge number of those boxes too. And it's why people collect art, because it holds its value over time. I mean, you can argue that a Picasso could be replicated by some guy in Asia somewhere who's like an expert artist and can replicate it almost identically, but it's not the original. The original's scarce. People put money into it, and it holds value over time. So when you compare things like property and Bitcoin against those other assets that have held wealth over time, people will just go back to basics. AI will change the world, absolutely, but people, we're humans. We go back to basics and try and keep things simple, I think.
Speaking of property, it'll be a good one for our audience. Who are going to be mostly people into property, whether investors, businesses, developers in the property space. Let's do the Bitcoin versus property kind of diatribe where we work through a few aspects. So Nik, start off with because it seems like you're into property. Maybe you own some property, maybe invested in property, or maybe even done developments. I don't know. Give us your kind of 2 cents on what you think of property in isolation, and then what you think of property versus Bitcoin for whatever metrics or reasons you would compare the two.
Yeah, I've dabbled in property over the years. I suppose we all have. You guys are taking it really seriously, and all kudos to you. It's very cool. When you go to an event or a dinner party, or you're in the pub and you're like, "Yeah, I'm in property." That is cool, man. That's like real stuff. You can go and touch it. You're developing stuff. You're adding value to society. It's a cool thing. If you go into a dinner party or the pub and you say you're a Bitcoiner, it's a bit weird, isn't it? The conversation shuts down. I think.
Nerd.
Yeah, exactly.
Yeah.
Yeah. Yeah. I think so. I don't like to, even though I'm not exposed or invested in property today, I don't like to think of it as a versus. I think it should be an and. And I think the hybrid model is probably the way to go for a lot of people. First and foremost, because the adoption, the understanding, the visceral feeling of of people towards property is a positive one. So you should start there and then look into where Bitcoin can fit in as well. I think a lot of people will say to me, well, one of the huge benefits of property is the leverage you get. And that's right, but leverage introduces obviously risk. The whole reason to use leverage is because the underlying capital appreciation can be low, so you're using leverage to pump the returns. So you're looking for that asymmetric reward. And therefore I ask myself, okay, well, where else is that asymmetric reward? Bitcoin looks like it could be one. So then if you map out a hybrid approach over the years, Bitcoin plus property could work pretty well, I think.
And what about you, Stu?
Again, exactly like Nik, it's not a versus. I mean, I'm using both strategies and harmonizing them both. And that's the reason why I wanted to join got set up the Ground Up podcast and got into property in the first place in 2020, 2021, watching all this money be created and think, what is the point? We can pay everyone at home from the government printing money. Why do we go to work? And to me, it's a synergy between actually increasing my debt position in the world. I believe that's almost certain to fail, which, since the beginning of time, they've printed money, from the Roman times right the way through to now. So increasing my debt position, which gives me leverage by buying property, means that I can obviously create an income, but it's a positive income from owning that asset to buy Bitcoin. And as soon as I understood the 3 points, which is money, credit, and capital, obviously understanding money is important. Buying property and being a property developer is like level one, in my opinion. It's like great. You're definitely one up on most people by understanding that owning assets is a good thing, and a lot of people do. But then there's people who actively go and buy and do this strategy. And then level two is believing totally in that the credit system is going to, so money, credit, and capital. Property allows you to increase your credit position, play the game that all the billionaires play, increase leverage as much as you can to put as much debt out, which is certain to go down in terms of purchasing power over time, which means your debt reduces. And then any extra any money that you can create from that strategy, you can then buy the hardest asset known to man. So you're basically winning on both sides of the coin. You're increasing your debt position in the fiat world, which is going down, and then as they print more money, which is almost certain to do, the Bitcoin, which is scarce, goes up in value. So it's playing this arbitrage between both of these planets, both of these worlds, and it's high risk, high reward, and I do think that is the strategy of the next decade.
Well, I'll put my 2 cents on that as well. I mean, agreed. It's not. I don't mean Bitcoin versus property as a which should you do, as if a binary, as if it's a binary choice, but more just based on the two asset classes, based on the two thesis of investment class. What are those sort of differences? And I do think there's a lot of similarities because of them both being very scarce and ultimately a fundamental utility. People need to store their wealth. Well, they should. It's kind of the reason why people put money into pensions, even though that's all a sham. But people need to store their wealth, but people really do need to live somewhere or work somewhere or shop somewhere. So the two things are kind of similar. I feel like when I speak to property people about Bitcoin as well, just through the nature of doing property, you're dealing with a lot of debt instruments, and people already inherently in property understand the concept that the central banks are debasing the currency, and that by taking fixed mortgage debt against an asset where they're debasing the currency, which is devaluing that that debt LTV, so the loan to value against your asset, but then the gross asset value, which includes your equity stake, is just going up and up and up. You're leveraging a huge arbitrage in equity, which is only really a function that you can do in property as something that pays an income to support and service that debt, which is why I
Mm.
love property. And I'll always be much heavier into property than I am into Bitcoin. But the concept is any surplus cash, put it into Bitcoin. And when Bitcoin's at a dip, buy more Bitcoin. Because I did a last night, just before we did this, I thought I'd give a case study to people. In 2020, we finished a project, pub conversion, left about 70 grand in that deal. So this is at the finish, left about 70 grand in. Let's assume I put that 70 grand in at the start of the deal, at the start of 2020. What my return on that in terms of capital uplift and in terms of net income per annum is that 70 grand is now worth about 350 grand. If let's say I left all the money accruing in a bank account and I added the equity to that. If I just put that money into Bitcoin, 70 grand is Bitcoin at the start of 2020, it's worth about 630. So it's almost double the rate of return. Now, again, that's not the reason that I would still have gone back in hindsight and put it into property because of the other upside benefits of owning property, building a business around that, using that as a bit of a marketing ploy to then be able to leverage more investors to grow a business around it. And there's many other reasons why I think allocating money into business, into developments, has an unknown unquantitative upside compared to just pro rata. If I put it in Bitcoin, what was the upside? So I do think there's similar qualities in Bitcoin and property, and my belief is that you should be somewhere around the 20% allocation in Bitcoin, and the rest you should be putting into your business, like making sure that Bitcoin is used as a treasury asset to support your business in times of need, which I know both me and Stu have benefited from in the past, where it's like, I've got this easily liquidable cash that's sat there in Bitcoin with a great proxy in terms of it being able to kind of rise as they print more fiat currency. But I want to keep a lot of my money slushing around in the business to grow the business, because I believe my compounded rate of return in the business is always going to be my better upside. What do you think of that in terms of allocation of your wealth? Like both of you, what do you think of that?
I'll go first quickly, Nick. So it's so funny that you just said that you'd put 70 grand into property and yet it would double in Bitcoin. And yet I think we should call it real estate and property, because real estate and Bitcoin, because Bitcoin is the alpha property. And if someone made me choose between buying real estate or buying property and I could only do one, I would 100% be only buying Bitcoin. I'd work as hard as I could and run 4 or 5 jobs. And all I would do is chip away to buy as much Bitcoin as my energy and time would allow me to buy. The difference with obviously in my business is that I do loft conversion. So I'm actually adding to the only thing that sits above Bitcoin for me is family and security and your home. So when we do loft conversions, people are making a decision between buying Bitcoin and trying to save for the future versus actually having a more of a relaxed. Everyone's so compressed in the houses I go to. They've got 2 kids sharing rooms. They need the extra space. Obviously, if they move, they're hit with tax, they're hit with stamp duty, moving cost, listeners' fees. So the money that people spend on a loft conversion is to improve their home life. So that would sit obviously at the highest, and then it would be buy Bitcoin, and then it would be doing anything else, and everything measured against Bitcoin goes to zero. It's not a bubble. Everyone says a bubble is where it sort of goes up and crashes and comes back down to the baseline. Well, Bitcoin's never done that because it's never come back down to its original level. So it isn't a bubble. And I think leveraging, but I don't think people should own 13, 15, 20 houses just because they need to lock up their wealth, in today's money by buying the leveraged debt. Bitcoin is that alternative now. And then the cost of property doesn't surge the way it is. It sort of plateaus or hopefully calms down because it becomes more of a utility. More people can have homes. It sorts so many problems out. So yeah, I would be buying Bitcoin over doing property development all day long, but that's just me.
If it was binary, right?
If it's binary, yeah. Leveraging them both is the best play. It's like 10x on you doing both.
Yeah, I think the number one thing that everyone's got to do is model this stuff out. And I know I come from a background of finance, and that was my bread and butter, building these models. And I know a lot of people just kind of get a feel for like the direction, maybe some back of the envelope numbers. You've got to, as best you can, model this stuff out. Sit down, get your personal balance sheet, your business balance sheet, do some scenario planning, and that will help you arrive at an answer as to what the mix should be. And then, as you're doing this and you're looking at various scenarios, what the property could compound at, what the Bitcoin could compound at, factor in the effort involved. I mean, property is cool, and you're probably interested in it if you're building a business in it. So maybe the effort part of this equation is less important to you guys. But somebody out there maybe starting or at the beginning of their journey, it's going to take a lot of effort to actually do the property deals, to find the deals, to get the financing, to take on the leverage. And actually, if you model it out and you see that the rate of return that Bitcoin might compound over time by just literally buying this thing and not touching it, that's low effort. And you might just want to go out and just get a normal job and do that, like Stu alluded to there. The other point I'd make is that sometimes when you speak to traditional investors, whether in equities or property, they will say, "Oh, I understand my world. I don't really understand Bitcoin." But you guys have throughout this call, you've actually illustrated the level of sophistication that you've got and that many people have by just investing in property. You got to understand the economy. You got to understand rates. You got to understand risk. You got to understand the demand of your local market. You've got to understand how to structure a deal. That is incredibly sophisticated stuff. So when somebody says, "I don't understand Bitcoin," I'm not buying it. There's a lot of smart people out there doing some smart things in their current world. If they just took the time to educate themselves on this new thing over here, it'd click.
I'd add one thing in terms of the upside, because I think this is something just for the viewers' benefit that they may not quite fully grasp about the potential upside of Bitcoin when we're comparing Bitcoin and property. So, property in the scenario I gave for that case study, during the time from 2020 to now, there's been a huge amount of money printing from the government, just trillions around the world. And our own government, I think, printed just over $1 trillion during that period. And what's happening there is they're debasing the fiat currency, which is helping support the Bitcoin thesis basically as a scarce asset in terms of its denominated value in pounds sterling, which is isolated and localized to this country. So our country that uses pounds, my property is in this country and valued in pounds. That has gone up based on not just demand and things like that, because the demand for property is quite high, but also this proxy position against the pound that it is valued and denominated in from a debt position, which is a localized place. And my property has exposure to pound sterling in this economy, but Bitcoin has a global exposure because Bitcoin's tethered to just the global economy. If for whatever reason there's a huge purchasing move that happens in Brazil or in China, that's also affecting the price here in the UK because it's this global layer. So the potential upside of Bitcoin and that exposure upside is ubiquitous globally, right? If it's everywhere, so it means if it goes up 1%, it's not like it's going up 1% pro rata to the size of the UK economy. It's going up 1% pro rata to the size of the global economy. And I just think that potential upside of market cap, it's still such an infant stage of size. I mean, art itself is what, 18 trillion as a global asset class, and Bitcoin now is $1 trillion. It was 2 trillion. Now it's around $1 trillion, thanks to the markets. That's nothing. It's so small compared to what a 900 trillion kind of global, not economy, but in terms of global asset classes and derivatives and all this other kind of stuff that's built on top of it. The potential upside, that ability to expose yourself to something that is a global asset that is working across the whole, not only to me is that ultimately diversified, it's an asset class that is completely diversified in that sense, but also if it doubles, it's going up $1 trillion. And we're just not going to see that in local assets like property, where they are inherently tethered to the local issuance of that monetary system within that's confined to the walls and borders of that economy.
Oh, mate, I'm so bullish, man. You talking there about like like Sailor says, it's half. Bitcoin will become half of everything. It's got the potential to become half of everything. So if we're $1 trillion now, it's 450x from where we are now, and the markets are dropping half. It can easily next week go exactly the same way as it's just done the last week. So drop in whatever it's just dropped $30,000. It can go 60,000 as soon as people understand this, and it's not going away. People did think, I thought in 2017, this thing was for gangsters, criminals, black market, not interested. It dropped. I thought, you silly fools, you've lost your money. Good luck to you, and got on with life because there was no alternative way of escaping this matrix we live in. And then boom, COVID hit. Bang, you wait to see what the next thing happens. They're going to have to print 20 trillion or something to get us out of a 38 trillion hole because of the amount of debt they've created that has to be repaid. The only way to do it is to print more currency. And Yeah, I'm just so bullish, man. And it does, and that's coming from a second cycle I've rode all the way, and I'll ride all the way down. If it goes to 30,000, 25,000, whatever, that's dollars. Don't care. I'm just trying to find £1,000 here, 5 grand here, 100 quid here, whatever you can afford. Plug this gap, and I think for forever you'll thank yourself for it.
Well, maybe let's finish on that sort of point you've raised there, and throw it back to Nick. What do you think of the someone who's had all those years in the financial world and equities and things like that? What do you think of the state of play with the sheer debt levels of the Western economies, particularly? What do you think that means for kind of the future going forwards? The way out. Why do you think it's happened? What's your thesis on the current debt position of the world?
Ah, I mean, it's insane. It's totally insane. This doesn't end well. Currencies that are more than, 1 for 1 in terms of debt to GDP, they collapse. That's just what happened. It's like let's say you earn 50 grand a year and you've got 50 grand of credit card debt, and the interest rate's high and it's just compounding over time, and your salary's not going up. That is not going to end well. Like, how do you get out of that situation? You either, I mean, in terms of government's case, they've got this magic money printer. So they press the red button, print some more money, and then that's how they service the credit card debt, essentially, in that analogy. But the normal person doesn't have that. But we are still in this system where, the governments that are running our lives, essentially, in our economies, are in that system. And their way to deal with it right now is just to print more money to kind of kick the can down the road. But there's only so far that can go. And it feels like we're in this point in history where people are, and this is why the gold price has been doing what it's been doing. People are going, hold on a second. How do we actually get out of this? I do actually think we've touched on AI today. I do actually think AI could potentially be a savior, because in that analogy of the credit card debt equaling your salary, well, in order to get out of that, one way is to bump up your salary by becoming much more productive. And AI will potentially help people and economies to do that, to become more productive and potentially, pay the debt off that way. So there are ways out, but who knows when that point with AI will come. I think, for between now and then, you have to find ways to protect yourself, and Bitcoin's a really good option.
And what do you think of the UK in terms of its debt to GDP and just obviously the state of taxes and things like that? What do you think is, just putting the economic lens on now in general?
It's dire. It's really bad. Anywhere you look, you see examples of this playing out, and it's wreaking havoc on people's lives. I think our debt to GDP, depending if you look at net or gross, it's either just below 100% or just above 100%, which, again, that's not going to end well. In terms of taxes, what do you do if you're the government? What do you do to fix this?
Growth.
Yeah, I know, but how do you get that growth when you're taxing people into oblivion and causing millionaires to leave the country, or like causing people to just think, oh, I'll stay on benefits. You can't do austerity. I think, when the Tories tried that, it was incredibly difficult. And then when Kwasi Kwarteng and Liz Truss tried it, they just got whacked in the bond market. It's a really difficult situation. I mean, if it was me personally, the US seem to be doing it right, where they're looking, they're exploring a strategic Bitcoin reserve, they're exploring bit bonds, where, they take government revenue and tax revenue and put it into bonds that are backed by Bitcoin that can appreciate over time and potentially put a dent in this debt. And then we just need to find a way between now and when AI hopefully helps us to slow the rate of decline. Because if we don't do that, the way in which we're going is going to cause some major problems.
And Stu, what do you think? Obviously, we bang on about this all the time, but have you got anything else you want to say on that particular topic?
Not really. I think when you were talking about the debt there, Nick, it just sort of made me think, when you grow up, you're sort of conditioned to don't take debt and don't get yourself in a bad position, save money in the bank. But as they print all this money, as you said, all over the world, the M2 money supply gets so diluted. But if all the countries do it at the same time, on the surface, everything looks the same. And yet, if you are the guy who's, studied hard at school, got a good job, saved money, was sensible, they are ripping you apart. They are pulling your pants down and deflating everything you've worked for. It is modern day slavery. And as you are getting debased over time, that the pie gets bigger and the wealthy are increasing their debt position to take more of that pie. And this is the game they've been playing. And all the way through the baby boomers, ever since World War II, this has been going on. And unfortunately, we're at breaking point now. And Bitcoin is a life raft. And I think it's the only thing that will get us out of this hole. And the quicker you learn about it, the better.
Beautiful. Bitcoin, baby. It's going to the moon. Well, look, Nik, give us tell people where they can find you and any services that you offer. Obviously, you mentioned offering like consultancy for people, and we'll have quite a few wealthy individuals and business owners and people who watch this podcast. Where can they find you? What is it you're offering? Plug yourself, mate.
Yeah, I suppose the easiest way would be to go onto my website, niklysiuk.com, NIKLYSIUK. I've got my social media on there. You can follow me on YouTube. You can book a call with me at the minute. My calendar's open, so you can book a call just to chat. We'll go through your current situation, talk about how Bitcoin might fit in. It's not relevant to everyone. You know, some people aren't ready for it, but we can have a chat, see where you're at, see where Bitcoin might fit in. Follow me on YouTube. Go on. I've got a community of people who might just want to, you know, get among like-minded people, because Bitcoin and crypto is a lonely place. Like most people mention it to their friends, and you know, you're just classed as a nutter. So that's just a place to hang out and learn a bit more and be among people that are trying to do the same thing.
Amazing. Well, thanks for joining us, mate. Thanks for your time. Hopefully that's been a good episode for people. Something different than our usual doom and gloom, planning permissions got harder, rates are going up, and all this kind of bullshit that we have to talk about on this podcast. There's a Bitcoin thesis. If you liked it, then let us know if you want us to do a bit of a follow-up, and maybe when the price stabilizes or when it hits a new all-time high, we'll bring Nik back on and we can kind of look back on this conversation and go, well, what was everyone scared about, you know? But look, buy Bitcoin, be safe, big love, and see you next week.
Gents.
Subscribe, guys.
See you later.
Round up sound, ooh, yeah. Real estate deal. We lay 'em